It's Friday, the 17th of August, 2018. Hope you had a good week in the market. We're a little bit mixed here with the Nasdaq being dragged down a little bit by the semiconductors. It lost 2.7%. Biotechs also lost some ground, and the financials got hit pretty hard, bringing them down now for the month and just barely up for the year. So let's take a look at the charts, make some sense of it, and see what we have in store possibly for next week. The S&P 500 is still holding above that 280 level that had been prior resistance, and we are within striking distance of an all-time high once again. Let's look at the 30-minute time frame because we did stumble a little bit this week, in particular on Wednesday with that gap lower, but we got it all back on Thursday. We got back above that 5-day moving average, pulled back. The 5-day moving average flattened out, and now we're holding above the volume-weighted average price from the peak that it made just recently and back above this recent low. So backing it up just to the 65-minute time frame, these are some levels that have been holding. The volume weighted average price from the June low we saw was hit here in August, and then again here in August. So that is, not only the important horizontal support near 280, but it is an important area for that volume weighted average price. Heading into next week, we have a market which is showing higher highs and higher lows above a rising 5-day moving average. And the first level we want to see hold would be 283. As long as we continue to hold above 283, then the buyers remain in control of the intermediate term time frame. If they were to break down below 283, then I think another test of that 280 could be a little bit more difficult next time. That is the ability for it to bounce from that level. Nasdaq, as we noted, did lose a little bit of ground, just about a third of a percentage point here, but it's still a bullish looking chart, still holding above the rising 50-day moving average here. And when we look at let's look at a 30-minute time frame. On the 30-minute time frame, you can see we retraced about 50% of the recent low to the recent high. So that swing low to the swing high, we retraced about 50%. That's what this line is right here. A 61.8% would have brought us down to 177.5-ish. We're still below that declining 5-day moving average, and we do see a pattern here over the last few weeks of lower highs and lower lows. So first we have our higher low. That tells us that we're starting to neutralize. Now what we need to see is for this market maybe to do something like this and create a higher high. Then we could be a little bit more confident the buyers are coming back into the Nasdaq. But we did lose some ground from important stocks such as Amazon, which if we take a look at Amazon since the earnings report, we're still holding above that, and that'll be an important level here in the next couple of weeks. Facebook also still, under pressure, as is Netflix. Netflix, I had mentioned on Twitter, saying that we want to keep an eye for potential support in this area at the year-to-date VWAP. I also said that, it's only potential support. The sellers are still in control of Netflix. We still have a declining 5-day moving average. This is simply a level of interest, an area where we want to look at the action more carefully. So since the last earnings report in Netflix, you see that initially we had these buyers in control, and then I'm sorry, the earnings report was right over here, and initially they were in control for a couple of days, but once the sellers, gained control, it's been capped underneath that volume weighted average price. Now it's underneath the VWAP from this low as well. It's getting oversold, but that doesn't mean it's a reason to buy. We have to wait for confirmation. We anticipate all potential scenarios and wait for price confirmation before we get involved. Apple, of course, is the standout. This stock has been really a monster since earnings. We've had one test of the volume weighted average price since that event, and it shows the insatiable appetite that investors seem to have for Apple. So that remains the strongest stock in that NASDAQ 100. The Russell 2000 continues to trade within a tighter range. We saw this week that the volume weighted average price from this low here, that's that purple line, was tested back in June and then just again this week. So the range is tightening. We have higher lows. We have this trend line heading down, and we're spending more time at the high end of this range. This is the level that we want to see this market get back above, and it always matters how it does it. So right now, I think that if you were to get involved in the Russell, your stop would be down here. An ideal scenario would be that it kind of chops around in here, does something like this, and then is able to break higher. That way we could see that 5-day moving average continue to rise and be able to set our stop at a higher point. So keep your eye next week on the Russell 2000 for potential breakout. Semiconductors, we had been noting the triangle that that the semis have been trading in, and they broke the lower end of that. It doesn't mean it's lights out for the semiconductors, but it certainly tells us, we are below the year-to-date volume weighted average price. That's that purple line. We're below the 200-day moving average. And as I said to subscribers on Thursday night, if we were to break below here sometime in the next few days, it's most likely a trap that would, lead to a more significant bounce, perhaps up to that 200-day moving average. But with a declining 20 and 50-day moving average, and this market below a 200-day moving average, it tells us that we really need to be, more patient with the semiconductors. The question is, are they tracing out a big top in here, or is it consolidating once again for another push higher? Truth is, we don't know, so we wait. When there's a period of doubt, you either sit on the sidelines in cash, you find a different market, or you trade on a shorter term time frame where you can make more sense of these shorter term time frames. And right now, I think that's not the appropriate action for most people. Biotechs are continuing to look good on the weekly chart. We get down to the daily time frame. We're back into this box that we had seen, but this week we did see a little bit of damage done for the potential of upside. This is what I had drawn in Thursday night as a potential of what we'd like to see happen for the biotechs. Of course, we didn't see that. What we want to look for next week is to get back above and hold above 116.5 to 117. If we were to do that, and then kind of bide some time, build energy, then maybe we'll be trying to position for a bigger breakout. But right now, it just seems kind of mixed messages on different time frames, so best to just probably stay away. Financials, as we noted, did lose some ground here, mainly on that gap lower on Monday. If we take a look at the average price that the financials traded at this week, you can see here that the average price, the volume weighted average price, is down here at about 27.92, showing that breakdown, the gap that is, unlike the energy, which we'll see in a moment, was an opportunity. It was viewed as an opportunity to increase long exposure in these financials. Looking to the daily time frame, we still see a choppy mess. We had seen that these breakdowns to new lows were not reasons to short, and this break to a high was not a reason to buy. Instead, we're just kind of still backing and filling in here. I think that you've got to look at maybe a trend line off of these couple peaks. It's still messy, so I don't really perceive any edge in there. And finally, the energy, as I noted, had a hard breakdown. Now we have to look at this as, we had a big level of support in here that had formed over through the course of 3 months. That failed, and now we've got 3 months worth of people trapped in here. We can, in fact, take a volume weighted average price off this April low and see that that's where that move began. And then with these lower highs coming in, we saw more repeated tests of support. It broke down. Maybe it rallies up in here, but if that volume weighted average price from the April low starts to act as resistance, then I think you've got to just forget about these energy names for a while. It looks like they're still back into their base, and that it's basically dead money at best.